Eric Muathe, Muathe.com, with US market analysis for the weekend of May 13th and May 14th, 2017. Let's take a look at markets here with about 2 hours to go. This is how we are trading. Let's call it pretty much a slightly unchanged day for the most part. Let's take a look at those charts. The key takeaway as far as the Nasdaq is concerned is we continue working on that breakout. It's week number 3, where the market has been holding above the prior weekly closing high. The level we were watching was 5911.74. The market is above that. Again, this is a nice follow through. Also, as long as the Nasdaq weekly continues to trade above 69.1, that's a sign of a market that is stable to outright bullish. If we take a look at the Nasdaq, ever since the breakout on the daily chart, we can see that the Nasdaq's been trading well above that price range. In fact, we broke out and followed through. That was a sign of a market with intention to move higher. Also, we can see that the RSI continues to hold above 69.1. So in terms of the major averages, the Nasdaq seems to be holding up very well. If you take a look at the hourly, we can see that the same line that gave us this short-term breakout, in other words, once we moved above that line here, the market went higher. And if we extend that same line, we see that the market recently tagged it and jumped or recovered. So you can see we did a back test of the same line here over the last 2 days, coming off the lows there. So as long as the black line is holding and giving the market support, we can assume that the market also on a short-term basis, as far as the Nasdaq is concerned, is stable to outright bullish. And don't forget that on the monthly for the Nasdaq, we've been holding the view that as long as the monthly continues to hold above 69.1, we can expect this market to be still showing signs of strength. And this is exactly what is going on here. This is the 7th straight monthly gain. And we can see that this is not out of the realm of understanding why, because once the RSI jumped above this level here in 2013, we got the market staying in a healthy bullish phase until the market moved back below 69.1. So right now we're above 69.1. We can assume that the market continues to be stable at worst, bullish at best. Now, if we take a look at the Dow, we can see a little bit of a different picture. The Dow needed to hold above the prior weekly closing high, and the level we were watching there for a breakout was 21,005.71. Right now we have 3 weeks of failure to break out above that price, or failure to hold above that price on a weekly basis. That looks like to be the first sign of a market or a major index that is struggling. Also, we had a slight improvement week to week, but this came at the expense of the technicals. So that negative divergence might be setting the stage for a bigger drop. Also, don't forget that the Dow was trying to move above 69.1 on its weekly chart. It was rejected. So we see that the Dow is probably starting to turn around here. As long as it can't break out on the weekly chart above 21,005.71, chances are we might start looking at a market here that now could be poised for some type of a pullback. And if we take a look at the Dow daily, similar type of situation here. We did not break out above the all-time daily closing high for the Dow, and the level we were watching there was 21,115.55, which happens to be this current all-time daily closing high. We did try to break out here a couple weeks ago, maybe a week or so ago, and failed. Also, we can see that we came to test the RSI level that gave us the break off the highs. So this level here, we broke down during this movement off the highs, and so we came to test that level. As of right now, the market has hit that line twice, and being rejected here with a double top. So short term looks like the Dow is pointing downwards, and we can expect to see a big down day at some point should the Dow move below RSI 50 on its daily time frame. We can also see that the Dow is doing its best to hold above the 50-day moving average, which is giving bulls hope that the market continues to be constructive to bullish as long as it is holding above that 50-day moving average. On the hourly chart, I would expect the market to continue being stable as long as this line is holding, the line that connects recent RSI lows. So as long as this line is holding, the market should be stable. At some point, should we break below that line is when we should expect a big drop, but for now this line is holding. And also if we take a look at the monthly for the Dow, we can see that yes, it's down for the month slightly. The level to watch here is the prior monthly closing high. As long as the Dow is holding above that prior monthly closing high, we can see that the breakout is still going on, and as that level to watch is 20,812.24. Anything above that shows that the breakout that took place last month continues to take place and the market is still above that breakout. Otherwise, should we drop back below that price, that would be a failed monthly breakout, which might actually lead to further selling. Also, we need to watch the RSI on the monthly. Again, here, as long as the Dow is holding above 69.1, we know that the market is at worst sideways and at best bullish. Let's take a look at the S&P 500. Let's take a look at the weekly, and we can see here that yes, we saw an improvement week to week for the SPX, but this has come with declining technical strength. That negative divergence could actually be setting the stage for a pullback more than the current pullback we see. Also, we were not able to move above 69.1 on the weekly time frame. That could be a problem going forward. The key is to whether the market can hold above the prior month weekly closing high. So the prior weekly closing high was at 2383.12, going back to this weekly closing high right there. So we've spent the last 3 weeks above that price. In other words, the breakout continues on a week-to-week basis. As long as the S&P 500 is above 2383.12, this is a good breakout. Otherwise, should it fail to hold above that price, in other words, if we crack back below that price, that's going to be a failed breakout. A failed breakout might be suggesting that now we are going to be due for some type of a strong correction. So bulls need the market to hold above 2383. Otherwise, failure to hold above that price might telegraph the next move, which could actually be down. But right now we are above that 2383 level, so the bulls are still in control. Now that is not true on the daily time frame. So on the daily time frame for the S&P 500, a little bit of a different story. Here we had successfully broken out on a day-to-day basis, and the level we were watching there for a daily breakout was any move above 2395.96, and we did spend some days above that prior daily closing high. So right here we spent some days above that, but now we are back below that price, so we can assume that this is a failed daily breakout. That could be the first sign that this market is running out of momentum. So that's one red flag. Also, we can see that the new move to new highs on a daily basis came at the expense of the technicals, which made a lower high. In other words, we have now what is negative divergence on the daily. Generally, that means to expect a deeper move lower. And also, there is a line that goes back to the break of the RSI. So this break here, we broke below there of the daily highs. Since then we've tried to move above that line, and we've been rejected. You can see that there was rejection right here sometime at the highs of May right there, and now since then this has become a rejection territory. Well, that's why the market was unable to sustain the current levels here are around 2400. So it looks like on the daily S&P 500 is projecting some type of a move lower. And again, the true test is whether it can hold above the prior weekly breakout level. So let's see where we close for the week. But the level again to watch on a weekly chart is whether we can stay above 2383.12. Anything above that price means that the bulls are still in control. Failure to hold that price, as we just discussed, could suggest that that's a failed weekly breakout, suggesting to expect lower prices week to week. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings.